Hello and welcome to the week ahead video with me, David Madden. Now before I take a look at the major events of next week, let's take a quick recap of the major events of the week just gone. This here is GBPUSD and it's likely to be in focus next week, as on Thursday we have the US core PCE reading, and we also have personal income and expenditure from the US on Thursday, and then on Wednesday we will have the final reading of both UK GDP and US GDP. So that's going to be the major economic announcements to look out for next week. Just taking a look at the events that happened this week, the Bank of England unexpectedly hiked interest rates by 0.15%, while the consensus estimate was for them to keep interest rates on hold, hence why we saw a sharp move to the upside in GBPUSD. In fact, the currency pair hit its highest level since late-ish November, so that really underlines how bullish the market has been recently. While the currency pair continues to hold above these three simple moving averages, it's likely the short-term uptrend will continue. A move higher from here could see a target this zone of 1.3448, and a break beyond that could see a target this region at 1.3512. If you take a look at the price action in the past 12 to 24 hours, we can see the currency pair has retreated from its recent peak. Looking at the MACD indicator, we can see that positive momentum is in decline, so that suggests the bulls are no longer as influential as they once were. If you do see a move to the downside, support could be found from this zone here around 1.3240. And if we do have a break below that, we could then be looking to head back down towards the lows of early December in 1.3159. Now, also in terms of what other markets could we see volatility in next week, this here is the US30, the Dow Jones. It received a boost on Wednesday night after the Federal Reserve issued quite a hawkish update in relation to their policy. They intend to double the speed at which they're tapering their bond buying scheme. In addition to that, the median forecast in relation to interest rates is for 3 hikes in 2022 and 3 hikes in 2023 as well. But the hawkish update also was accompanied by quite an optimistic and bullish outlook for the US economy, hence why we saw a sharp move to the upside in the US30. In fact, it hit its highest level since kind of mid to late mid-ish November, so that really speaks volumes about the rally we've seen in the US30 in the last few days. While the market continues to hold above these three simple moving averages, it's likely the near-term uptrend will continue. Move higher from here, could see it retest this peak here around 36,565. We can see here the market has retreated a little from its recent high. We can see here on the MACD indicator that positive momentum has almost completely disappeared. So it suggests that the power that was behind the bulls is really diminished. If we do see further declines in the US30 from here, we could find support from this region here around 35,377, and a break below that could see a target this area here around 35,006. That's all from me from this week. Thank you very much.